Hello, this is Ryan Bembridge, Senior Reporter at Mortgage Introducer at Mortgage Business Expo London. With me I've got Stuart Wilson, Channel Marketing Director of More to Life. So, Stuart, key retirement predicted equity release lending reaching $3 billion in 2017, up from $2.1 billion last year. Why do you think the market, firstly, has grown so considerably?
I think there are a number of reasons for that, Ryan. I think there are lots of drivers behind the growth in this market. There are things like pension reforms, which I think has changed the way in which people are approaching retirement. I think more and more people are coming to look at their house as an asset rather than something they might pass on after they die. So they're looking at the house as a way of funding retirement. I think interest-only mortgage customers who are looking for ways to repay that debt if they haven't got a savings vehicle in place are coming to equity release as a solution or a potential solution. And I think just generally there's more awareness of equity release now, there's more advertising on TV. So I think more and more consumers are coming into retirement recognising that this is a potential solution for them, and so they're going to their advisor and asking about equity release.
So do you think this $3 billion figure this prediction is kind of dead on? I mean, what was it, 1.25 for the first 6 months, right?
Yeah, and the second half of the year tends to be the busier half.
Okay.
So we are certainly going to be close. I think it'll be great to break through 3 billion. I think it'll be close. If I was a betting man, I'd say maybe a little bit under, but it'll be somewhere around about that level. So a fantastic milestone, given that we broke through 2 billion for the first time last year. If we break through 3 billion in the following 12 months, that will be an amazing achievement.
Where next?
Well, the CML said a few years ago they predicted this would be a 5 billion market by 2020, and I think we could easily achieve that. In fact, I've said before, I'll be disappointed if we're only at 5 billion by 2020, because there are so many driving factors behind the growth of this market. Just organically, we should be there. I think with all of the other innovation, the new funders, lenders coming into this space, I think we could easily break through 5 billion by 2020. All
right, cool. So, another question, has there been enough innovation in the equity release market so far in the last couple of years, I suppose?
I think there has. I think there's certainly space for more. If we look back over the last few years, the kind of innovation we've had is in the areas such as enhanced lifetime mortgages, lifetime mortgages for people with health issues. We've had the introduction of new features like flexible capital repayments, downsizing protection, inheritance protection, fixed ERCs, which have been a thing in the residential mortgage market for years, but in the lifetime mortgage market it's tended to be gilt-based, which are quite complex to explain to clients. So there has been innovation in the market in the last few years, and I think that's another factor behind the growth in the market, but there's always room for more. I think there will always be a demand amongst consumers for more and more flexibility, more and more choice in terms of how they access their lending and how their loans are managed throughout their retirement. So yes, there's been lots of innovation, but certainly room for more.
So what do you think's coming next then, if you were going to get your crystal ball out?
I think the next big thing, if you like, will be products that perhaps go a little bit beyond the borders of what we know today as equity release. So what do I mean by that? I mean products that can stretch LTVs even higher. So at the top of the market at the moment, you can get to 55.5%. There are lots of consumers looking for lending beyond that, older borrowers I mean, particularly borrowers with interest-only mortgages. Quite often you see people in that space that need LTVs of 60, 65, even 70%. And there aren't really many products that can help clients in that space right now, and certainly not equity release. So I think we'll see the growth of, they've sometimes been referred to as hybrid products. Right. So part lifetime mortgage, part interest-only mortgage, bringing together the two to enable consumers to go beyond the current rates. But there are lots of other innovations that could come along as well, including things like products that pay an income, or an income in inverted commas, and other innovations as well that can help consumers that today aren't perhaps even looking at equity release.
Right, okay. So as it stands, the market is dominated in many ways by Aviva and L&G. So how within that can you get the More to Life brand name out there?
Yeah, it's true. I mean, they are the biggest brands in the market, and that's a good thing, by the way, because those household names, I think, has been another reason why the equity release market has expanded. Clients trust those brands, they see the advertising on television that's done, and they become more familiar with it. More to Life, I sometimes joke it's the biggest brand nobody's ever heard of, because we're actually the third largest lender in the UK, and we're the largest independent lender in the UK of equity release products. So we've got ourselves a really good position in the market, but we do want to go further than that. We want to grow larger. In the last 12 to 18 months, we've brought on 2 new funding lines, 2 new funding partners to More to Life. That's helped drive product innovation. We've launched new products with new features, some of the modern features I mentioned a minute ago, like downsizing, protection, flexible capital repayments. So More to Life is always looking to do more, and certainly we've got an ambition to be even bigger in this marketplace and be one of the biggest names in the retirement lending space in the UK.
But do you always want to go through intermediaries only, or?
The intermediaries, without a doubt, are the most important customer. They drive this market. Equity release plans are only sold on an advised basis.
Is that a yes, or?
Oh, absolutely. I mean, we will always be supportive of the intermediary space. They've helped us grow to where we are today. We just recently passed £1 billion of lending, most of which has been done in the last 3 years, and all of that business comes from intermediaries. So they are our most important customer. They're our lifeblood, really. So they're going to be a big part of the market going forward. And I think for us as a business, we've got to be listening to what advisors want. They're the ones telling us about the next product innovation they want to see for their customers, the next feature they want to see that customers of theirs are asking for. So that's where we need to be listening with big ears as to what the intermediary space wants for the next generation of equity release clients.
All right, Stuart, thanks very much for joining us here.
Thanks for having me, Ryan.